Welcome all of you, and I won't introduce you individually because I want to ask all of you what you took away from the RBI's discussion. Hitendra, you want to go first? What did you take away? What stuck with about what the governor just told us?
No, I think,
Yeah.
I hope everyone felt what I felt, that, I hope everyone felt what I felt, that we have the right central bank governor at the right time, I think. I've been watching the financial markets quite closely. It's still not working?
No? You can
Just keep saying, no, it's not working. So I think, I've been working in the financial markets for a long time. I think the kind of decisions the Reserve Bank has taken in the last 4 years have been quite tremendous. I think people forget that when he came in, the previous MPC was looking at output gaps narrowing, inflation everywhere. They were seeing growth was sizzling hot, and within 3 months you could see it was completely a wrong reading. And he, at the risk of sounding like the government's man, actually was the one who triggered that change. From then to what the MPC or the RBI did during the COVID period, not just the monetary policy decisions, but the decisions taken outside the monetary policy, and then the unwinding. I think he mentioned it himself. So I think the one takeaway is, I think at least the monetary policy part of, or the Reserve Bank or the regulatory part of our economy is in good and safe hands. Plus, I think some of the things that he called out, crypto, etc., I think it would have taken a brave man a year back to say what he did. And I think it's a reassuring every time to hear him. That's what I would say.
And Vaidyanathan, on the insistence of the core inflation point, which he made, I hope you heard what he said about keeping the Arjuna's eye on core inflation. Does that give you the sense that in February another rate hike is coming? They're not quite done yet?
I joined a bit late, so I missed that Arjuna matter, but we can clearly see that RBI is keeping the Arjuna kind of focus. But to your previous question, since I wasn't there, the part which stayed with me from this conversation was that RBI is there for all seasons, and we are there for all seasons. I thought it was really important.
Ashu, if you heard what he had to say about the credit cycle for wholesale loans, he was optimistic despite the fact that a lot of companies have still not started investing in new capacities in a significant way. He said it will come, but it is different from the previous cycle. Your thoughts, because you are largely a wholesale lender now, what is your sense of what he said about that?
Yeah, then mea culpa, I came a bit late, I missed it. If you still want me to comment on the point, I could.
Yeah.
But certainly one of the things which always strikes me with Governor Das is the share. You feel he's a man who you want at the helm. When the things get tough, and he's obviously demonstrated it in spade over the last 4+ years he's been the helm. But I think we've obviously seen the wholesale credit pick up more, mainly because of the inflationary impact on the working capital, some of the diversion to the NBFC side. I do think some of it is going to probably ease off. I think what we're all waiting for is the pickup on the private capex cycle, where it seems well poised. Certainly the balance sheets are ready and certain sectors are picking up now. So I think that's going to be the big driver from our perspective, which we're all waiting for.
When do you think that will pick up, the serious capex?
Well, we hope in the next 12 months.
Next 12 months?
Well, I think you're set for it, right?
Piyush, what's your assessment of when we can see a serious capex jerk?
Yeah, look, I think the point I'd go back to what the governor said was around the capacity utilization.
Yeah,
you
75%.
75% capacity utilization, and then you combine that with consumer confidence, which still remains quite high, right? And the third part with slight inflation slowdown, so the pricing effect of increase in volume starting to neutralize. I do think we are in for a slightly more positive corporate intake of capacity utilization and capacity borrowing and expansion. So yeah, I would think the next 12 months is a very interesting period for corporate loan book expansion.
Kaustubh, one of the flies in the ointment could be the global situation, because a lot of the companies are watching what's going on globally, and other than lower capacity utilization, that might be stalling their plans a little bit. I mean, what's your perspective from JP Morgan?
I think from JP Morgan perspective, just to complete the first part, if you look at the total borrowing of the largest companies in India in the last 6 years, the absolute level of borrowing is roughly the same. Yeah. However, the debt to equity and debt to cash flow ratios for the same large cap companies is at the lowest or the best level ever, which means they need slightly more confidence maybe on utilization, but more importantly, so the largest companies may end up deploying capex in new initiatives, new type of industries, creating capacity for different industries. So I think all of those discussions are very much seriously underway, and the larger companies will not only invest in their existing businesses, however, they will in fact start investing in new businesses just because where the cycle is and how they want to position their overall business for the future. And that does not have any bearing, just to conclude, on where the global cycle is, because the global cycle just is a recalibration to a lower growth. That's about it. Otherwise, credit markets are functioning well. Equity markets have bottomed or started functioning reasonably okay. And Indian markets have continued to function well with abundant liquidity. So there is no real concern that we see from the large caps why they should be unduly worried about starting their capex.
Hitendra, you've seen previous capex cycles. Does this one look a little different from the previous serious capex cycle that we had in many ways?
Yeah, no, so I have a slightly divergent view. I don't think we're going to get the kind of credit cycles we have seen in the past. I think those 50,000, 60,000, 70,000 crore ultra mega power plants, people buying, people setting up very large cement capacity, steel capacity, or even in infrastructure roads. I think the banking system has learnt, okay? I think it's learnt that they were the equity provider and they were the debt provider and there was nothing else at the back end. So let's hope it doesn't happen again. And I don't think even the Indian industry is thinking like that, because now the industry rightly is going to ask for proof of equity and proof of clean equity and be much more stressing the projections. So I think that cycle, according to me, is not coming back. I don't think 70, 80,000 crore projects are coming back. Not in the next 12 months, not in the next, I think, quite some time. And it's not too bad, actually, if more of it is getting funded from non-banking and, either the equity or other cycles. But my own sense is the credit growth that we are experiencing even now, I think we are at least seeing much more demand for credit from smaller companies now who are, the anywhere from 50 crores all the way to say 2,000-3,000 crore kind of turnover. I think these companies are growing at a much faster clip than large companies. They are exploring and identifying markets internationally as well, doing quite well. So I think you will have credit growth, but it won't be the spectacular 30,000, 50,000 crore types. It will be much more smaller and granular. So, and that's also because banking system has also tightened its concentration norms and credit norms as well. So that's my sense.
Piyush, you agree with that?
Exuberance is not going to be there, but I also think that there's going to be additional factor, hopefully, of new age investments, right? So you're talking about new initiatives. I'm talking about new age investments. Automobile sector disruption. EVs. That's going to be the case. Potentially, new power sources, hydrogen. Hopefully that's going to be bringing in, and then supply chain disruptions. That's going to be another area of investment, right? And the last but not the least, I would say, where the banking sector will have to go in a partnership with corporates is going to be encouraging them to invest in sorting their internals in order to become more efficient. Not a forte of banking sector. It normally looks at market. This is more about internal efficiencies, but that requires some serious investments as well right now, and it will have to go into that as well.
Ashu, you're in an interesting situation because you've exited the consumer finance business and you're focusing on wholesale. But in the last 5 years, the money has been made in retail and it's not been made on the wholesale side of the book at all. So what is giving you the confidence that consumer is not the space to be, but wholesale is?
Yeah, so I think each bank needs to play to their competitive strengths. I think the decision which Citi took, which was a global decision, by the way, not specific to India, is our capital is best served in terms of a long-term sustainable competitive advantage for us and for our customers in providing a network and globality to our corporate clients and institutional clients, right? And by the way, every bank has a different model. For us, lending is a part of the stream, but what our focus is on is how do we cross-sell our core lending into getting revenues on the investment banking side, market side, transaction services side, right? So we need to be careful. I think we've had actually a very, very profitable institutional business. And while our consumer business was obviously the more, it's the kind of brand out there, and it's been a terrific brand and customers have loved it, I think the returns in the institutional business and certainly the proportion of revenues and more importantly the proportion of profitability has always been higher. I personally right now feel super excited about the opportunities we have in the way, the India has been dealt a very, very good hand right now in terms of the absolute has always been there, but the relative story in India is so remarkable, so unique. And as a foreign bank, and we have a couple, of my colleagues here as well, I think we are very well poised to add value in that, for India to exploit, whether it's getting FDI in, portfolio investment in, helping Indian companies, including the MSMEs, which Hitendra talked about, letting them go global, helping them get more efficient with digitization. So I think this is a very exciting time for us.
Vaidyanathan, what's your perspective on what this new credit cycle will belong to? Because as I said, last 5 years, wholesale was a bad word. I mean, the market rewarded banks which were more retail than wholesale. But do you think as this credit cycle fleshes out, wholesale will also have its time in the sun?
I do believe so. I think, we know that the sector lost close to about 8 to 9 lakh crores of write-offs and provisions in wholesale credit the last 8 or 10 years. State banks alone, state-owned banks alone, so it's insane. But I think people have been scalded a lot, and I think people have been careful. But I think the next big growth cycle, corporate, it will be moderate, but the big growth cycle coming in retail. Retail, I don't mean, let me just tell you, we typically use retail as 3 components. One is retail as consumer credit, home loans, car loans, personal credit cards, etc. Second is MSME credit. Third is the agricultural credit.
Yeah.
But let me just talk just the retail credit, personal credit. That market in India today is about 44 lakh crores as of March of 22, probably it's now about 2 to 3 lakh crores. That's about $600 billion. That number, I tried to do a back of envelope calculation, compounding between 70-80% or 50-60% for the next 8 years. It's touching 2030, that $600 billion will touch $1.5 trillion. Just think about it. So that's one big growth coming up in that space. So that is one big growth. Second thing is quality, because book can go all over the world, and consumer credit has grown as well. So in terms of quality, I believe that India has created certain structural guards around retail credit today, which is not even existing even 8 years ago. And those structural guards are very important.
For example, one structural guard is bureau. Now, I was doing the maths that 2017, the number of trade lines on credit bureau was about 500 million. Trade lines, every single loan is a trade line, not unique customers, trade lines. Today, 2.2 trillion trade lines exist on the bureau. And 5 years ago, data quality was not great. Today, data quality is good. 5 years ago, awareness of bureau was not great. People are not so sensitive. Today, everybody is sensitive about the bureau score. So that's a very structural guard. There are many more, but we'll talk as long.
I think on that, and on that structural point, there's a lot's been written about the uptake in digital payments. But the underlying story of that is the amount of structured data that is getting created in the retail sector. And on a lighter note, I thought you were about to ask him, like you asked the governor, how much of hair did he lose because the last cycle and cleaning of the corporate book?
No. You're accusing me of being terribly insensitive. I'm not, believe me. But, Kaustubh, how does a global bank like yours see India? Because, global banks have had a mixed kind of pedigree or history in India. Some have succeeded, some have pulled out some of their businesses, some have come and lingered. It's not seen as a force in that sense in India. But where does JP Morgan fit in here?
Yeah, I think you're right that different banks have had different approaches in terms of how they would look at India. I think if I look at, like Ashu mentioned, ours is also there are two large businesses for us in India. One is, of course, our revenue business, which is a wholesale bank business that we have. And there's a very substantial corporate center that JP Morgan has in India, right? So if you focus on the wholesale business, structurally our business is meaningfully larger in revenue today than what it was certainly 5 years ago. And just each of the building blocks that now we have for us in India have reached a critical scale where we believe it could take off at a much faster growth than what we have been able to achieve in the past. Because only when you reach a certain critical scale on each of the businesses, whether it's payments, transaction services, investment banking, markets, etc., then it starts moving the needle for us on a global basis. So where is the incremental growth for business, for global banks going to come from when the whole world is going to grow at 1.7% versus 3%? It's going to grow from economies and countries and businesses which are grown to go faster. And India, certainly, if you start looking at it, is going to go faster. And the second key thing, we discussed about drivers for growth and drivers for capex and consumer cycle. I think the big shift that you are already seeing in the data, which even the governor referred to, is rural and urban. What is currently happening in India is a massive amount of incremental credit growth is actually coming in from semi-urban and urban areas. And again, that cycle is just getting started. So if this cycle continues the way it is, the rate stabilize the way I think we are looking at, affordability indices are good. Even basic consumption themes have enough momentum to drive, therefore, business, and that retail business will drive our wholesale business faster.
Right. This bullishness is very evident, Hitendra, in your bank, because, while others might be pulling out of certain areas, you're doubling up investments. You've bought L&T Mutual Fund. So it looks like in all areas you seem to be quite bullish on your India prospects.
Well, I think it's very difficult not to be bullish about the country, right? I mean, if we are not bullish now, then there's something wrong with us. All of us as people, right? I mean, this is both on an absolute basis and on a relative basis. I think if you're looking at it, with a per capita income of $2,500 or so, and almost everyone thinks in the next 25 years this will multiply at a faster pace if we manage the economy well, at a faster pace than the GDP, right? The per capita GDP should. And once per capita GDP crosses $3,500 as China did, let's say 25, 30 years back, I think it's a J curve for everything, right? So I think that's one reason which is driving our bullishness. The second is very obviously, as India integrates more and more into trade globally, right? We export more, we import more. We are already a $1.5 trillion trade economy if I take services, imports and exports of goods put together. And HSBC is the world's trade bank, right? So you can see that as this 1.5 becomes 2, 2.5, 3, we will have business, coming out, and then we can compete with the domestic banks. In the retail, as you mentioned, I think, I think I at least tell our people, it is the first class banks locally, especially the private banks, but also some of the public sector banks, it basically kicked foreign banks out of retail banking. Okay, we can attribute whatever reason to it. We were just not good enough. Given certain decisions which have been spoken about, I think our sense is there is a space for one international bank to occupy the full space, right? From checking accounts, mortgages, credit cards, to investment banking, ECM, DCM, and the full process of corporate banking. We hope to be that bank. We hope we are good enough to grab the opportunity, because the opportunity is great. It's now for the management to demonstrate whether we are good enough to capture it or not. So therefore, that underpins our optimism.
Sure. I want to ask you, Vaidyanathan, because, you are a relatively new bank. And over the last few years, what we've seen is that public sector banks have ceded a lot of ground to private sector counterparts. But that game may now be about to change because they've cleaned up their balance sheets. Now they're becoming very aggressive, led by State Bank of India. What does it mean for newer entrants like you and private peers of public sector companies like you?
I mentioned to you earlier how large the market's growing. I just told you that $1 trillion of consumer credit getting added. I told you the number. You can add close to about $600 billion getting added in the same period, 8 years, for SME credit and agri credit. So it's a big story. And frankly, you're right, because even state-owned banks, these are doing pretty good job in personal credit. I'll give you one statistic, that will tell you a story. Our company, you may call it a new bank, but actually if you add back our past history as a non-bank finance company, it's like 12 years now. In 2010, our loan book was 94 crores, retail. by 2018, it was 32,000 crores. Today, it's 1,10,000 crores. So, 100 crores to 1 lakh crores in 12 years. So, where does it come from? It's come from the same country. Because India is so underserved, unserved, all that. So, according to me, this story at 1 lakh crore is not going to stop here. It will become 2 lakh crore, 5 lakh crore, 10 lakh crore. It will go beyond my lifetime also. Why do I feel like that? Is also because India is fundamentally, one is of course growing, we know the numbers, but also India is fundamentally moving from being unorganized to organized, informal market to formal markets, unbranded markets to branded markets. And with the new digital technologies coming, you go deeper. So I believe the story is not going to change. It will just go on forever. State-owned banks will do well. Private banks will do well. Foreign banks, I'm just surprised that this gentleman pulled out. I'm so disappointed. Again and again, I say that. City was such a wonderful price. So, except that, I'd say that everybody will do well here. I mean, I shared some numbers.
Do you feel bad, Ashu, about that global decision? Because it seems like Citibank cards was
he's
so
not
successful in India.
He doesn't seem very pleased with my joke, but...
No, listen.
Yeah, it looks glum.
Let's be clear. Emotionally, it's a very difficult decision.
Yeah.
We created the modern day consumer banking. I joined the bank on the institutional side, and we used to see, the trailblazing and wonderful work which the consumer bank did. And I think to some extent, sometimes you, in your careers, reach a point where the strategic decision could vary with the emotional. Like every day I get very emotional customers who are going to miss, the cards business. I do believe strategically the decision which Jane took when she took over as CEO was the right decision. And by the way, our decision to exit consumer banking, not only in India, but 14 other markets, that is not mutually exclusive with us being bullish on India. I think it just means we're going to redeploy our capital and our focus. Let me give you a few facts then. Today, India is the second largest employee force for Citi after the US. Because we have, as both my colleagues have, apart from a bank, we have a vibrant service center, global capability center, which we're growing, 10,000 gross people every year, and I don't see that changing, okay? I think we also see you're going to compete in areas where you think you're going to have, as I said earlier, competitive advantage where the clients approve. This market is big enough for all of us, plus our public sector colleagues, to thrive in. But we must not try and be everything to everybody. That's the call we made. I believe strategically it's the right call. Emotionally, I get it. Okay, I get it.
Okay. You said the market is big enough for everybody and it can fit in all kinds of players. But Piyush, a new player called Jio is coming into the financial space. What does that mean? Because, it's not just another bank or another NBFC. We know what they are capable of in terms of being a disruptor.
Well, look, considering we've just declared that there's space for everybody, I'm not going to go and change that, right, and say that, one disruption will cause a problem for everybody. So, but I think the great thing that the Indian market has done is gone on to introduce very structural competition throughout this period. Right? So I think that structural competition is great. Whether there is, Sanjay is sitting there, AU Bank, or there is IDFC. These are institutions that, the way they have been created, they are going to do great things in the future. I would say welcome Jio to the club. Clearly a number of tie-wearing bankers need consultants. Bring on Jio, they may need as well.
Kaustubh, where do the fintechs fit into this? And how do you see them? As people you can cooperate with or align with, or do you think they can steal your cheese?
I think it is all of that. But more so, I think it's partnership and cooperation. Because ultimately fintechs have to compete with access to capital, and access to capital in the private market and public market for fintechs has become a lot more difficult. So which means their ability, innovation, skill set of improvisation, all of it can be used by mainstream banks very well. So if you look at SBI and how their digital journey has been, I'm sure there has been a lot of fintechs who have helped them to create the platform, which is one of the most successful digital platform that they've created. And I think it's largely because of the strategy, but execution is supported by a number of fintechs. So that's a very good example. So I think there's a lot of room for them to grow.
Gentlemen, thank you very much for your time. It's been lovely talking to you, and thank you for dropping by today. Thank you, all of you.